Hello, everyone. Good afternoon, and thank you for taking the time to be here for our Smart Women Savvy Money 2010 webinar series. 30 minutes on the clock, 20 minutes to teach, and 10 to talk. Today's topic, though, will probably be a bit longer than 30 minutes. And we have been getting some comments back from a number of our attendees that there tends to be a lot of questions, and so we definitely want to make sure that there's enough time to answer any questions that you might have. Want to make sure that everyone can hear me okay. There is a chat box there, so if you could just say, yes, I can hear you, that would be great. Sometimes technology can be wonderful, and sometimes it can be a pain in the butt. So just want to make sure that everybody can hear me. All right, so the Smart Women Savvy Money webinar series, we've been doing this for about 6 years now, and it's always held on the second Thursday of each month from 1 to 1:30, and every month except December, because we know that people are really busy there. And our desire and our role and our goal is to make sure that people have content about their lifestyle and different financial related issues that will help them to create the lifestyle they desire and deserve. So with that said, we have a robust list of activities, blogs, events, webinars, and also videos. We're going to start hosting videos. So as you can see here on our website, we have a ton of content here. And if you've missed a webinar in the past, you can actually click on this link here that says, if you missed a webinar, we've got you covered. And with that, you'll be able to see all of the webinars that we've hosted over the past several years. Everything from caring for your loved ones to what's long-term care, some inspirational pieces about how you can lead with courage and confidence, and a variety of things, even covering your digital assets. Anyway, we also have a tremendous amount of blogs, and here it's really designed to teach you some of the fundamentals about how you can create the lifestyle you desire and deserve. That's what our intention is. We have a great speaker today, and before we get started, I just want to kind of go over a couple of content. First off, you do have a chat box there, so there's going to be some questions that come up along the way. We get it. Just drop it into the chat box, and I'll be sure to ask the questions at the conclusion of the talk, because we want to be able to, for some of you who don't have a lot of time, we want to make sure that we get through her presentation and we can ask the questions at the conclusion of that. All of our webinars are recorded, so you will get the replay link within a few minutes after the session ends. And you can feel free to share it, and which we hope you do. But there's going to be a lot of content that you're going to see here, and so it'll be a great way for you to be able to identify certain topics or issues that you want to really get a deeper dive into. So we're going to try as best as possible to stay on time. And with that said, I want to introduce you to our speaker. And here is a great blog. Now, there's been a lot of content and discussions about reverse mortgages. And I have to say that we've been working with Janice Cohen for about, probably 4 years, I would say. Is that right, Janice?
I think that sounds about right, yeah.
Yeah, and she has done an amazing, amazing job in really being able to work with our clients at Urban Wealth Management to not only look at, is a reverse mortgage an appropriate vehicle for you, but she's even been very highly ethical, which we love, where she has told people it's not going to be a good fit for you, or you might want to consider selling your home or a cash out and refi. So she's a realtor, real estate professional. And when you are part of our network and our group, you do have access to our very vetted network of professionals, and she certainly falls into that group. So we're very pleased to be able to share with you some of the things that she does. Now, as a HECM, and I said, what's a HECM? I've never heard that before. It's a home equity conversion mortgage specialist. And so she's helped senior homeowners figure out what is going to be the best option for them. Number one, understanding what reverse mortgages are and how they work. They've been around, reverse mortgages have been around, what, about 30 years now?
About 30 years, yes.
Yeah, there's been a lot of regulatory change with regards to reverse mortgages.
Yes.
And so one of the things I really want her to be able to do is to explain to all of us here what those changes are. There have been some amazing updates that has made the ability to do a reverse mortgage, still create a legacy for your family, and have a backup plan for your third act. We hate to call it retirement planning because we're nobody's sitting in a rocking chair retired. So with that said, I'm going to turn it over to you, and thanks, Janice.
Thank you, Renee. I really love being able to share information about this program that I passionately believe in. I have never had a person not say to me, my life is better because of having done this reverse mortgage. So it's a thrill to be able to share with you some of the elements of a reverse mortgage and just to kind of familiarize you and to see if you have questions or just, you know, I'm from New Jersey, and there was a store called Sims, and Cy Sims used to say, an educated consumer is our best customer. So I like for people to be educated. So that's what we're going to do today. So the name of my company is Retirement Funding Solutions, but not for long. We were acquired by Mutual of Omaha a year ago. So we are going to be experiencing a name change, but everything else is going to remain the same. The name change probably will happen around January. But in the meantime, Retirement Funding Solutions is the name of my company. Let's see, let me move. Okay. So we'll talk about some of the basics of a reverse mortgage. We call them the 3 L's. Longevity. Will I have enough money?
I don't think we can
see
your
living needs.
Janice, we can't see your screen.
Oh. How about now?
I can see your screen.
Oh, you can?
Okay. All right.
Okay, good. Will you have enough money to meet your basic needs? Of course, my crystal ball broke a long time ago, but we do know, and I'll be able to kind of get into the weeds a little bit with you about this, that having an additional bucket from which to draw, even if you wait until you absolutely need it, will help you to get to the end goal. And to not, you don't want to find yourself in a position where you're outliving your money. Lifestyle. Will I have enough money to maintain my standard of living? And liquidity. Will I have enough access to tax-advantaged money when I need it? Tax-advantaged money, we're going to get into that a little bit more. We're going to talk about how reverse mortgages work, myths versus facts, which I must tell you, I have heard so many myths, and they usually come from your next door neighbor's hairdresser's college roommate's cousin. No one can ever point directly to the person who originated these myths, but they are out there. Uses and benefits. And uses and benefits. All right, our next slide here. The benefits of a reverse mortgage. They are low risk. This is a government-insured program. It's a non-recourse loan, which means this. At the end of the day, when you want to either sell your home or if you pass away and your children are going to sell your home, no matter how much you owe on that house, even if you've lived there a very, very, very long time and your loan balance is maybe even exceeding the value of your home, which is very rare. But even if that should happen, no one, not you, not your heirs, no one will have to bring money to the transaction to get out of the loan. You can do what's called a short sale or a deed in lieu if there isn't equity left in the house. But that is very rare, and most of the time there is plenty of equity left in the house. And I'll get into that a little bit later. The funds of a reverse mortgage are non-taxed. We are lending you money that you've already paid taxes on. So it's a return of your equity. Your equity is money that you've already paid taxes on, so you are not taxed on that money. You can use the funds however you choose. We do not tell you how to spend the money that you borrow from a reverse mortgage. There are no prepayment penalties. That is absolutely not allowed. A very unique feature of a reverse mortgage is a line of credit. If you take out a line of credit, that line of credit grows over time at the same interest rate that borrowed money would be charged interest. So if you have an interest rate, let's say of 4%, that line of credit is going to be growing at 4% per year. So if you take out a line of credit on your reverse mortgage and you start out with maybe a line of credit of $300,000, in 10 years you could have $600,000 available to you, assuming you haven't touched the money. Next point. You retain the home, your name, the home is in your name. It never is transferred to anyone else's name. And your heirs will pay off the loan at the time that you pass away. And they can buy the house if they want to for 95% of the value of the home, according to an FHA appraisal. FHA appraisals very often come in lower than a private appraisal. The FHA is conservative. So your heirs can buy the home for 95% of the FHA appraised value, which is very advantageous to family members who want to buy the house. Some of the common uses of reverse mortgages. Consolidate debt or pay off other debt. A lot of people have very high interest credit cards. You can pay those off. Supplement monthly income. Very often I have people come to me, they say, I'm just like $300 to $500 short every month. I just need a little buffer and I'll be in good shape. You can use it as a retirement planning tool, meaning that you can get monthly income if you like. You can take a little bit less of your assets under management on a monthly basis, supplement with reverse mortgage assets. You can remodel, do home repair or maintenance. Your home is your single largest asset, most likely. And a lot of seniors, they love living in their home. They've lived in their homes a long, long, long time. But that home needs to be maintained in order for it to maintain its value. Healthcare costs and prescriptions. If you're getting Medicare, then you know that there could be a donut hole for some of your medications. You can use reverse mortgage to fill that donut hole. You can defer draws against Social Security income. You don't want to start taking Social Security income too early in the game. You can get so much more if you wait a while. I think it's till age 70 and a half, you can get your full retirement benefits at that point from Social Security. Long-term and in-home care. Let's talk about that for a minute. Long-term care insurance is so important, but it is one of the least purchased programs, and it is one of the most needed programs. Folks who did not purchase long-term care insurance can use a reverse mortgage as an asset with which to pay for in-home care or even to pay for to be in an assisted living for a period of time or a rehab. It can make those expenses easier to meet. You can create a cash reserve for emergencies. How many folks have a car, like a Camry from 2005, and next thing you know, it needs some major work, and you love the car, you want to keep the car, it's working well for you, but you know, you want to be able to fix it or have options if you, whatever choices you want to make. You want funds for travel and recreation. You know, being retired doesn't necessarily mean that you're sitting at home, as Renee said, in a rocking chair. You want to maybe take a cruise. You want to join some clubs, even if maybe it's just going out to lunch once a week with friends, going to a movie. You might want to purchase a home using a reverse mortgage. That is an entirely separate conversation, and one that if Renee wants to do like another special program on purchasing a home using a reverse mortgage, we can talk about that. So what is a reverse mortgage? A reverse mortgage is a home equity conversion mortgage. It's a loan that enables senior homeowners, 62 plus, to access some of the equity in their homes without having to sell the home or give up title or make monthly payments. When I say you can borrow some of the equity, it's usually in the range of 50% of the equity that you can borrow. It might be more if you're in your 80s or 90s. It might be less if you're in your 60s. How does it work? Well, an eligible borrower is 62 or over, lives in the house as your primary residence, are able to pass financial assessment, which essentially means that you've demonstrated the willingness and capacity to meet your financial obligations, paying your taxes, paying your homeowner's insurance, your credit cards have been paid reasonably on time. Borrower's responsibilities, once you do a reverse mortgage, you are going to live in the home as your primary residence. You're going to pay the property taxes. You're going to pay the homeowner's insurance and the homeowners association fees if you're living in a condo or a planned unit development. How much you can borrow or your benefit is determined by the age of the youngest borrower on title. So if you are if you have a husband who's 90 and you're 70, we're going to go by the 70-year-old's birthday. Appraised value of the home, the current interest rates, and the program that you're choosing. The program meaning a variable rate, a fixed rate, a jumbo, it all depends. And you can receive the benefit in a variety of ways, in a combination of ways, in fact. You can get a lump sum of cash, you can get monthly payments, 10-year payments, which means monthly income for the rest of your life as long as you're living in the house, or you can get a line of credit. You can get a combination. If you wanted maybe $50,000 in lump sum of cash, you could get monthly payments with the balance of the money that you're eligible to borrow. If you wanted a line of credit of $100,000 and the rest in a lump sum, you can do that too. It's a very, very flexible program. Consumer safeguards. This is it is the most regulated mortgage in the country because we know we're dealing with seniors. So there are a lot of senior protections in place. A home equity conversion mortgage is non-recourse. So you will never have to bring money to the table to get out of it. It also means no one will ever ask you to leave your home should your loan balance exceed the value of your home. You retain title to the home as long as the terms are satisfied. What does that mean, the terms? Well, you're going to be paying the taxes, you're going to be paying the homeowner's insurance, homeowners association fees if applicable. You're going to be maintaining the house. no one's going to be looking in the windows of your home to make sure that you're taking care of it. But periodically, you know, I'll never forget once I had someone come to my door, and I had hedges in the front of my house that were too high, and I lived on a corner, and I had to cut the hedges so that it would be easier to see over those hedges. So things like that, you know, maintenance to the house. When you sell your house, your home, you or your heirs are entitled to 100% of the remaining equity, meaning the value of the home minus the loan balance. Your heirs get all of that, or you do, depending. Third-party counseling is mandatory prior to application. There are counselors that are licensed to talk to seniors about the reverse mortgage. And in fact, no one in this country could do a reverse mortgage without having that counseling. This is a disinterested party. They want to make sure that you have all the information that you need, that your questions are answered, that no one is trying to push you into doing this. It's a terrific safeguard. Your equity line cannot be canceled, frozen, or reduced. Equity lines at the bank can be canceled, frozen, or reduced. If your income changes, maybe after a set period of time, it is very common that people get an email or a letter in the mail from their bank saying, we're pulling your line, we're cutting the rest of of what you're eligible to borrow, you're no longer able to access it. A reverse mortgage line of credit grows regardless of the home value. Let's say you lived in New Orleans around the time of Katrina and your home value dipped. If you had a reverse mortgage line of credit, that line of credit would still be growing, as I mentioned, possibly by 4%, even if the value of your home had taken a dip because of the catastrophe in your area. So very important, the growth of the line of credit has nothing to do with the value of the house. Okay, myths versus facts. This is my favorite, because as I said, there are so many myths. Myth number one, the lender is on title or owns the home. No way. The lender is not on title. The borrower remains on title and continues to own their own home. You have the power to sell or refinance at any time, and the borrower must continue to satisfy the loan terms, meaning the taxes and the homeowner's insurance primarily. Myth number two, funds received from a reverse mortgage are taxed. They are not, because, as I said, this is a return of equity. If you are going to be getting back money that you've already paid taxes on. So this is a non-taxable event. The fees on a reverse mortgage are too high. In most cases, the fees on reverse mortgages are much lower now than they were in the past. But I do like to go through scenarios individually with each person so that they can know exactly what the benefits and the costs would be for them. And by the way, with regard to the fees are all financed into the loan, so you never have to worry, oh, I have to bring all this money to the transaction. No, they're all financed into the loan, with the exception of the counseling fee. Counseling charge is $120, so that has to be paid. But if in a hardship situation, that can be rolled into the closing costs as well. Reverse mortgages include equity share, i.e. the lender will take part in any appreciation in the equity. Absolutely not. This never happens on the current HECM reverse mortgages. All future home appreciation is solely for the benefit of the homeowner or their estate. And in fact, several years ago, when I say several, maybe 15 years ago, there was a rash of these companies that were doing these equity share programs. And eventually, the Attorney General shut them down. And only in the last couple of months, I've been hearing again that they are coming back and offering people to purchase part of their home in exchange for giving them a lump sum of money. And then, of course, you're giving up future appreciation in your home. Myth number 5, reverse mortgages are risky and the funds are not guaranteed if something happens to the lender. That is absolutely not the truth. A lot has changed since 1960, and the home equity conversion mortgage, which has been in place since 1988, is the safest, most regulated HUD mortgage available. They're FHA insured, and it is non-proprietary lender product. But even the proprietary lender products are non-recourse. Myth number 6, the borrower can end up owing more than the house is worth. So here's the truth. If you live in your house till you're 120, let's say you're the first lady who's going to live till 120. They say all the time, the first person who's going to live till 120 is now living. Might be a baby, might be one of us, who knows. If you live till 120 and your balance is growing and growing and growing, and your home value is not growing, you could owe more than the house is worth. However, you are never, ever going to be asked to bring money to the transaction to get out of the loan. So while you could owe more, you can do one of two things. You can do a short sale where you say to the bank, you sell the house, whatever you get for it, it'll satisfy the mortgage because this is a non-recourse loan. Or you can do a deed in lieu where you just say, here are the keys, do with the house what you will, not our problem. Or if your children want to buy the house, they can for 95% of the FHA appraised value, which is the best deal. But they can buy the house. That's only if the loan value is higher than the value of the house, which hardly ever happens. Again, if a person lives till 120, I can't be certain that it wouldn't happen. Myth number 7, when the reverse mortgage becomes due, either the lender takes or sells the home or their heirs lose the inheritance. This is not true. Heirs may still receive an inheritance. If the home is sold and the balance of the mortgage is paid off, all remaining equity will belong to the heirs. No assets other than the home are used to secure the loan because it is a non-recourse loan. So let's say you have $500,000 in assets under management, and you have your home, which has sold. You'll get your heirs will get the balance, the difference between the home value, and even if the house is underwater, even if it's not going to cut into the $500,000 that you have in your assets under management. Nobody's going to need to bring any money to the table. Myth number 8, if a borrower outlives their life expectancy, the lender will kick them out of their home. No, no, no. A borrower cannot outlive the reverse mortgage. As I said, you could live till 120. You're staying in that house as long as the taxes are paid, the homeowner's insurance is paid. You can never, ever be forced out of your home. Myth number 9, you can never get out of a reverse mortgage. That is not true. You could do a reverse mortgage and then in 5 years you can say, you know, I'm going to move in with my daughter, I'm selling the house. You can do that. You can do that after a year, you can do that after 6 months. You can sell your house at any time. There's no prepayment penalty. And myth number 10, a reverse mortgage can impact my Social Security and Medicare benefits. They have no effect on either one. I will tell you this, for clients of mine who receive low-income heating oil assistance, low-income prescription, if they are on Medicaid or Medi-Cal, I don't recommend taking a big lump sum and putting it in your bank account in case you're audited. You want to have, there are very strict regulations on how much money you're allowed to have in your bank account if you are getting public assistance of any type. And that is, oh, and then reverse mortgage for purchase, which is a whole different subject. If you, my recommendation always is, do the reverse mortgage on the home that you feel will be the last home you'll ever want to own. And if it's the home that you have lived in for 30 years, great. But if you feel that the home doesn't suit you anymore and you want to buy a new home, maybe that's all on one level or is in a community, you can do that. And let's say you sell your house. Let's say, for instance, you sell your house for $300,000 and you have no mortgage on that house. You have $300,000 in cash. You could take $300,000 and purchase a new home, or you could take $150,000 of your proceeds from your sale and put that down on the new house, and then the other $150,000 that you owe to the seller of the house would be financed in the form of a reverse mortgage. So you would be putting down 50% and borrowing 50% in the form of a reverse mortgage. That way, you get to take $150,000 that you have left over from the proceeds of the sale of your house and give it to Renee to manage for you, so you'll have some nice income.
I didn't ask her to to do any marketing for me, guys.
But it is true. Am I eligible for a reverse mortgage? How much money is available to me? Can I get a quote? What terms and rates? Can I use a reverse mortgage to purchase a home? These are all individualized scenarios. If you have questions, I'm here to answer them. On a private call, I can certainly do that. Go over your birthday, how much your what's the value of your home, and how much you owe on your home. So this is my name, my license number, my phone. I have a toll-free phone number. My bank, which is Mutual of Omaha, is a federally chartered bank, which means I can do loans all over the country. So if you are not in California or Washington, D.C., or wherever you are in the country, I can help you. And you can go and look at my website, www.lareversemortgagespecialist.com. I happen to live in LA, but as I said, I can originate all over the country, and I have partners with whom I work all over the nation who can meet with you once we can get you qualified if you decide you want to get some information from me. So I want to thank you so much for sitting in, and I want to see what questions you have.
Thank you, Janice. This was great, as always. And I might add, too, that, as I mentioned, I've been working with Janice for the last 4 years, and she has helped clients of Urban Wealth Management who are outside of California. So this is great now with this recent acquisition by Mutual of Omaha. She'll be able to work with anybody across the country now, across all 50 states. The states that she was working in, she happened to also have her license in and a partner, so that worked out well, but this is great news. So if anyone has any questions, please use your chat box and include that's in there, and let us know what your thoughts are. I have a couple of questions. So when you're going through this process, is there a cap rate or a minimum or a maximum that one can apply for and get a loan on? So let's say you have well, here in California, it doesn't take much to get to $1 million on a piece of property. But let's say you have a $1 million home valued at $1 million, and you have a very limited mortgage on it or none at all. Is there a cap rate on how much you can actually take out?
Well, the amount that you're eligible to borrow is going to be calculated based on your birthday, the interest rate at the time, and the appraised value of your house, regardless of the balance of your mortgage. We are going to extinguish your mortgage That's going to be part of your beginning loan balance. Whatever you owe, let's say you have $1 million home and you owe $200,000, and let's say you're eligible to borrow $500,000. $200,000 is going to go toward paying off that house, paying off that mortgage, and then you'll have $300,000, which you can have in a line of credit, or you can have in a lump sum if you prefer.
Okay, that's great. And I'm assuming that the interest rates, now, since we have interest rates that are dropping pretty dramatically right now, the interest rates on the reverse mortgages are pretty consistent with what a general mortgage rate is?
The interest rates for reverse mortgage are based on the 1-year LIBOR, and there are other programs that have different LIBOR indexes, along with a margin, several different margins that we use depending on the circumstances. But I have margins based that begin at 1.5% and go all the way up to 3.75%, all depending on the circumstances.
Okay.
And then the LIBOR.
Right. Okay. All right. Very good.
It's not based on prime.
I'm sorry?
The interest rate is not based on the prime rate.
Oh, okay. All right. So everyone here, you can see Janice's site. She's got some great blogs on here, videos and content. So if there were some questions that came up that you may have after the conclusion of this of our session today, you probably will get the answers there, and her contact information is also here on the site. So also, as I mentioned at the beginning, we have a replay link, so this is all recorded, so you will be able to get this content and review it again at your convenience. So with that said, I want to thank everybody for being on, unless you have a question or two. Otherwise, we will look forward to seeing you next month. And next month, we have an actual, let me get in there, our topic next month is going to be also on basically how to take care of the loved ones in your life. And so we have a few things that are happening. One is toward the end of this month, one of our team members, Dorinda, is going to be doing a talk on how to qualify for financial aid. It's geared towards parents for student higher education. And she is hosting that at a local area restaurant here in the area in El Segundo. So feel free to come in, click on that link and come. Next month, it's What's Your Caregiving Plan? We have a consultant that we've been working with who's also a member of our Vetted network of professionals that provides some oversight about long-term care. If you have a plan or you don't have a plan, how do you find out what's the best location, facility, services, caregivers to find? And so on and so on. October, Diane will be giving, our team member Diane will be talking about being wealthy, which will make you healthy. Anyway, and then through November, we have a real estate professional, which Janice introduced me to, and so she's amazing. We're looking forward to having that talk, which is how do you be a landlord? How does that, make your life easier? Because for some people it can be a little bit of a challenge, but she's got some great ideas about that she can share with us. So with that said, I hope everyone has a great weekend, and we look forward to hearing and seeing you again. Thanks, Janice.
Thank you. Thanks, Renee. Thanks, everybody.